Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for a pretty active day today. It was Tuesday the 15th of December, 2020. That's where the 20s come in. We're about 5:45 in the afternoon right now. So we're getting a little bit of a pullback in the market, but the strength, it still shows up in the Russell, new all-time highs. The other indices seem to be just doing this waffling back and forth with a bullish bias, but more waffling than anything. It doesn't matter the bear news, it appears, that you throw at the energy market. And today there was a lot of bear news on it when the IEA came out and talked about reduction in demand through most of 2021. OPEC's saying that they see the same thing, and yet prices basically just hanging in there. Why? People are enamored with the COVID-19 vaccine. You know, they just started giving it out Monday, so today's day 2 of giving it out. We'll see how far it goes, where they're at. The Moderna came out today, and it appears the FDA on the first round said it's safe and effective. It means it goes now for a committee and I believe a vote. I'd be surprised if they don't get the go-ahead for the end of this week that they can be start distributing. I think they're going to have, I don't know, a lot of doses, but it'll be towards the end of December that we get it. Here's the interesting thing about that particular vaccine. You don't have to freeze it. And that freezing is an issue. If you're watching TV, you're watching all this dried ice, how they're tracking packages on FedEx, UPS as they're going through it. Moderna's is going to be different, and that's a benefit. But it's also a benefit to have another product, and there'll be more coming. That's the good news and probably what these markets are looking at. As for the bond and note market, you have to decide, do you really want to play whatever the FOMC, the Federal Open Market Committee, is going to do? I don't want to. And the reason I don't want to is the Fed's in a rock and a hard place. Whatever they do almost looks wrong. If they move now to extend programs, tweak them a little bit, are they reacting to the COVID because of the headlines? If they don't, why didn't they react when the headlines were this bad? I don't want to play that game one way or the other. You're seeing the gold and the silver hold up. The dollar was down fairly hard today, but did it get ahead of itself? Maybe you're already seeing the Swiss and the euro backing off. As for the S&P, the market for the week is up at the 3692 level right now, up 30.75 points. The highest close we've had so far is 3698, right there. So and I'm talking on a weekly basis. So as of this point, coming in for Wednesday's trade already, you're not far. You're 5.5 points away from it. That's not too bad. When you take a look at the chart, you can see the consolidation that's actually taking place right here. And the market's got a higher high there, and then it starts making lower highs and lower lows. Yes, I can make an argument that I have higher lows and lower highs, so the market's doing one of these things. I see it, you should see it too, and that's the beauty of swing lines. They help you see what's going on there. When you put moving averages on the market, you can see how the market is paying great attention to what I call the line in the sand, the 18-day average of closes. Now, as long as the market doesn't get back under that number, that's where I think the market is finding support. Should you take out today, which was Tuesday's low of 36 and a quarter, it would be, I think, considered an interim failure on the market, and you could add to selling pressure. So that's the number that, as I see it, you don't want to see this market break through on the downside. For the upside, new all-time high, 37.2540. That could be the number that it goes to. And momentum is overbought. So we have a market that people are saying, and I hear it all day long if you're watching Fox and CNBC and Bloomberg, is the market ahead of itself? Where is it? Where's the rotations going? It's there, and you're seeing the churning that is going on. Window dressing end of the year, yeah, and I'm looking for Santa. I don't know where he's at, but I think you'll get that Santa Claus rally. As for the NASDAQ, it's the same as the S&P to a degree. You got the higher high, lower low. It's different in that you don't have the higher lows and the lower highs coming in. What's the market doing? It's overbought. Both numbers are not even over 80 yet, so you're just nowhere. You came down for a couple of days and you got a nice bounce. In the Dow Jones, do you not agree that you're just churning back and forth here? That's what I'm seeing in the market. Market has got a pattern. If we look at this, 30,240 is higher than right here. I think that was 30,209 and a lower low. So it's the churn caught in that sideways action that I call a pipe. And it's very difficult when you're overbought to try to do anything. The Russell is far and away the prettiest looking of all the charts. It's got the fully embedded reading, one of my favorite tools. It's got the higher lows, higher highs, goes to the Bollinger Band, backs away, lets the trade come in on these breaks, and if they're buying, they're playing it until it doesn't work. And that's basically how bull markets go. As for the VIX, do you not see how tight the Bollinger Bands have gotten? So now you're in one of these funny positions where when I recognize that pattern and see it, it's typical of a churn in the market. You're not going up, you're not going down. You try to break out, you don't make it anywhere through that. You go to the upper Bollinger Band, you're not making it through that just yet. The trend is up, the bias is up, and momentum is pointing down. In the T-bond market, 18-day average of closes is battleground. But what's the point of trying to catch this one way or the other until we see what the Fed says, what it wants to do? Does it give us clues what it's going to do come January, February, and March? I don't know. It's going to be asked questions about COVID. It's going to be asked questions. It's got to be asked questions about tomorrow, what happens with Congress if they don't have a deal. Now, if they have a deal, the Fed will find an easy answer for that. No deal puts them in a hard position here. I don't think Mr. Powell could have been any clearer that he wants the government to spend. We'll see. And of course, he's going to keep interest rates low. I don't think he'll deviate on that at all. But what is low if the economy starts improving? You do realize markets are all knocking on highs, not lows. So the market's building in, oh, that COVID's going to change the world and we're going back to normal. Dollar index still in a downtrend, getting itself back and forth. Each day, you get the embedded reading, you lose it for a day, you get it back, you lose it, and you get it back. That's a rough one. You rarely see that happen. I think that's the first time this year I've seen it happen in any commodity where it does that. In the euro currency, you're keeping the bullish embedded reading. I think it's in play until you lose it, and which means you could be going to 122.94. I was watching what I thought were some excellent FX analysts, people that I have followed at the banks for different years. They are starting to talk high 120s, 130 area for this currency over time. This year, coming up, we'll see if they're right. It's a bold call, but you know, it's another 6-7%. British pound, you've got the pattern of higher lows, lower highs, but I can argue now a higher high with the outside day up today. See it? Higher low, higher high. You have a problem if today's low of 132.90 is taken out, because when you take out the low of an outside day up within the next two trading sessions, my rule, doesn't mean it to anybody else, I think that catches a group of people and you make a run for the closest either moving average or Bollinger Band. It's the Bollinger Band there. But you got momentum up now, you got the swing line up, the bias up, but what number are you already at? You see it, don't you? You hit the upper Bollinger Band, you hit your target. We need the Brits and the EU to get together and tell us what they're doing. I still, and I've stuck my neck out for months, I still think they're going to do a deal at the very last minute. Bitcoin. No trend now. Now you got the lower low, higher high pattern. You want to start getting out of the December. We're going to start moving to the other contract months now. In the energies, as I said, it's still a question of the power of the market. As long as you stay over this red line, the 18-day moving average, it means, to me at least, that Brent is stronger than our domestic WTI oil. But they're all with embedded readings pointing to the upside, still looking bullish. Bullish, bullish. Until you lose that reading, I look for the upper Bollinger Bands to be hit, and I think the pros are buying on the break. And as you can see now, you're fighting a battle against the 18-day average in nat gas. That big storm that's coming to New York, Philadelphia, Washington, watch out. The question is it just snow or has it got cold with it? That'll be what the market watches. Keep in the back of your mind that we are a commodity firm, unlike other firms you probably are used to seeing. One thing we do, and one thing only, is futures markets. Now, I, as you know, already cover for the firm the spiders and the ETFs as one of the lead chartists, and been around this game long enough where I know charts. I'm not saying I know the fundamentals of every market, but they do. So if you're a futures trader and you're saying, I want to know something about the fundamentals besides just the chart, if you haven't seen our research, you want to look at it. We're not talking a report during the day. We have our own meteorologists on board. We have people with years, I'm talking decades of experience, be it the grains, the meat markets, the soft commodities. It's all there. We broadcast, we send emails, different ways of getting you your information. If you haven't tried it, just go to our website, sign up for our free offerings. We'll get them to you. Now remember, it's Cyber Week. I'm ending my free offer this Cyber Week, which means if you buy any of my research product for a year, you get my free charting software. I today instructed my staff to kick the price up of the charting software. I went to $249.95. That is yours for free if you buy a 1-year subscription, which it'll end Thursday or so. So it's coming right at you now. I'll probably send out one more email and I'm done with it. And it's been a big success. We're pleased, but there's a point where you wrap it all up, and that's what we're about to do. You can give this away as a gift to anybody that you'd want. You don't start the course now. You can start it any time you want to give it a try. That's up to you. We'll honor your course and everything else you need for that. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.